So, welcome everybody tonight for our 7th startup talks here at HPI. We dearly welcome Georg Hauer tonight, who is the general manager for N26, the mobile bank. And as you all know, and he will be talking to us about bringing innovation from Europe to the world. From Europe to the world, not from America to Europe, but from Europe to the world. Very happy to have you here. Thank you for coming. You will probably all know about N26, the mobile bank. As I said before, mobile bank was designed to run its services through the smartphone, meaning it offers a current account that can be managed, opened and managed entirely via the app. And of course, this means they have very few offices, not a branch network, which allows them to operate at a very low cost and very efficiently, and makes them the fastest growing bank in Europe at the moment. N26 was launched in 2013, I think. I remember.
Founded in 2013.
Founded and
launched in 2015.
And launched in 2015. It has 3.5 million customers these days. That's quite a bit. And a valuation of 3.1 billion euros, which makes it the most valuable startup in Germany at the moment, one of the most valuable startups.
$3.5 billion, and it's one of the top 10 fintechs in the world.
Top 10 fintechs in the world.
And I would say, depending on the value and the exchange rate, we're the most valuable or the second most valuable startup in Germany. Second most valuable startup.
And we don't want to talk about the first most valuable, but the second, incredible in such a short time, really. 1,300 employees, I read, and you manage that from 4 offices all over the world, starting with America also. That's great. So Georg Hauer has been with N26 for some time, and you started off being in product management, I think I read, and you are now the general manager, but you weren't only general manager of N26, but before you worked for Uber, and before that for Boston Consulting, and you've studied quite a bit. So you have a master degree from the Wirtschaftsuniversität in Vienna, in Wien, and also an MBA from the Kellogg School of Business in America. So very well educated. Thank you for being here, and without further ado, I'll take it away.
All right. It's a pleasure to be here. Who of you has been to a bank branch in the past 6 months? And who of you actually wanted to go to the bank branch and enjoyed the experience? One person? 2? 3? Okay, 3. So what's interesting is that's a real global phenomenon, that fewer and fewer people go to bank branches. And at the same time, the costs of the bank branches stay the same or even increase. If I would ask the 3 remaining people, who of you would be willing to go to pay 50 euros per visit of a bank branch? Would anyone pay 50 euros for a bank branch visit? Well, this is a real problem for banks. That's a real problem because in order for them to sustain a bank branch network, you would have to be willing to pay 50 euros per visit. And I'll explain you in a bit why. Let's zoom out a little bit from the bank branch, from the bank industry. On a global level, 7 out of the 10 largest companies in the world are tech companies. And almost all of them are based in the US. Almost all of them. Of the top 10 companies, there's not a single European company. And if we look back into the history of large companies, that's clearly a shift from what it has been in the past. These top 10 companies are not there by coincidence. They are there because they're also some of the most innovative companies in the world. And that clearly shows you that valuation and size and profit is directly correlated with the innovation of companies. And considering that the first German company comes like far behind in the back of the ranking, this should worry people. This should seriously worry people, because if none of the largest companies is a German one, that also means that to a certain extent German companies and European companies in general are not able to catch up in terms of innovation with some of the other global tech players. But and one of the reasons why I like to speak today about how to bring innovation from Europe to the world is because banking, and specifically mobile banking, is the one industry where the ranking is completely upside down. Of the top 4 players that really matter in the world, there is not a single American player, not a single US mobile bank. And N26, being one of the front runners in terms of innovation in fintech and mobile banking, is even based here in Germany, which makes me particularly proud and is also a great asset for this country, because as the Minister of Finance recently said a year ago, we need a large, strong German bank. Well, if we fast forward a couple of years in the future, it might be that strong German bank is not based in Frankfurt. Let's talk about innovation for a bit. What is innovation? Innovation is the translation of an idea into customer value. Because if an idea or an invention does not provide any direct value for a customer, it's what you call research, like basic fundamental research, and that's typically the home turf of universities. Companies typically focus on ideas that create direct value in the world, and direct value means it has to create value for a customer, otherwise no one is paying for it. There are two dimensions how to measure innovation. There's on the one side, do you really develop something new, brand new? Do you go from 0 to 1? You create something out of nothing? Or on the other side, do you scale this idea? Because a lot of people, when they think about innovating, they think about this 0 to 1 idea. However, in order innovating actually also means to scale this idea. Because if an idea never leaves the university campus, it's an idea wasted. So in order to truly be an innovative company, you have to be able to master both dimensions. True creating new ideas and scaling them on a global scale. So far, Silicon Valley has been the home of some of the most important innovation that happened in the past decades. It's not a coincidence that some of the largest companies and some of the most innovative companies are all based there. And very often, every single time when we speak about innovation, when we speak about Berlin or maybe London or Paris being startup hubs, they're always being compared to Silicon Valley. Why? Well, Silicon Valley attracts some of the best talent globally and has been the home bed of some of the largest and fast-growing companies. And a lot of people think if they are based there, if they just move there, they might have a better head start compared to other companies. And for a long time, that has been true. Well, time changed quite a bit. But let's look back into the year 2013. In 2013, almost 70% of all venture capital globally was in the US. And a big chunk of that has been invested in Silicon Valley. Europe back then received 17% of all venture capital investments. Asia was 14%. Apparently, all other regions were quite neglected, basically so small that they even were ignored in this study. Times have changed. Nowadays, the US shrank to about 50% of global venture capital investments, which is still pretty impressive. So Silicon Valley still is one of the centers of innovation. But what else happened? The chunk of the share of Asia grew to almost 40%. So in the past 6-7 years, the real winner when it comes to investments was Asia. And Europe was really squeezed in the middle. Europe is currently receiving 10% of all venture capital investments, and the trend is clearly showing downwards. And as you all know, and a lot of you are founders, money and investments is quite important in order to scale an idea. It might not be super important to develop this 0 to 1, like creating a new idea out of nothing, but in order to scale the idea globally, it's crucial. So without investments, we have a real problem, because then suddenly innovation and also the future value creation comes from not just the US, but also in future from Asia, and Europe at some point might drop out of this study as well. What's important, however, here is that there isn't a shift from Silicon Valley away to one other region. In China, it's probably Shenzhen, which is the city where most tech companies are based in China. But Silicon Valley isn't just moving over there. But in fact, what you see is that venture capital investments are more spreading and getting more diverse to where they are going to. And that's great news for Europe, because Silicon Valley isn't moving, but is actually becoming just more differentiated across the world. And if you look at some interesting studies, those cities that have fewer venture capital deals than those cities that receive more, actually growing faster in terms of the number of deals. So in fact, this spreading of investments is accelerating at the moment. That if you look at, for example, Munich is one of these typical cities which is considered to be a mid-tier city when it comes to venture capital. Berlin is a big tier, together with London and Paris. However, Munich, and then on the other side, Zurich, is growing actually faster than some of the big cities. And again, I think that's interesting, and that means that the importance of Silicon Valley is actually decreasing on a global scale. But at the same time, there isn't one center emerging, but innovation is becoming a true global phenomenon. And Europe is clearly benefiting from that, Berlin especially. So I've been speaking at the very beginning of that, although the majority of large tech companies are based in the US, there's this one industry that seems to be an outlier, and that's banking. Banking is truly different. And I'll explain, in order to understand why, let's think about first, why does innovation in banking matter? Because I think most people would agree, including the executive board members of big traditional banks, is that banking is truly an industry that's absolutely ripe for disruption. When I asked you at the beginning who has been to a bank branch, and basically no one raised their hands, or no one enjoyed going there, that's a real problem. Because if you think about what do you think, how much does it cost to sustain a bank branch in any given year? What do you think? An average bank branch.
100,000 a year?
100,000 a year?
More like a million.
Million? Million?
Probably even more, 3 to 4 million.
3 to 4 million. So typically, the average bank branch costs between 500,000 and 1 million. Why? Well, we live in a city, so in the city, the branches tend to be bigger, and so in some cases, many cases, cost more than 1 million per year. The average bank branch is smaller, especially because the ones on the countryside, and they cost fewer. But still, the average one costs between 500,000 and 1 million. how many customers do you think a bank branch serves? Hmm?
You mean a day or?
Total, like basically, if you look in a year, how many customers are allocated to that branch, an average?
10,000.
10,000? 3,000? 20,000? You're pretty good guessers. So interestingly, it's typically between 5,000 and 10,000. The average bank branch in Germany is even less than that because the countryside bank branches serve less than 5,000 typically. That's why actually the average is slightly below that. But if we look at, let's say, where a bank branch is typically sustainable, it's typically somewhere between 5,000 and 10,000 a day. Well, if you divide 1 million in cost to the number of customers, you quite fast realize that the costs per customer is incredibly high. And if the average customer goes only twice per year to the bank branch, then suddenly you have a cost of 50 euros per visit that need to be covered by customers. So if you think about the fees that you're paying for your traditional bank account, and in many cases, as a student, you might get it for free, but as soon as you walk out of this building with your graduation degree, you'll realize that changes, and suddenly the bank needs to make money of you. And they need to make a lot of money on you just in order to sustain their cost. And that's a huge problem for banks. So what are the reasons why innovation matters? Well, first and foremost, if we look at other industries that have been disrupted in the past couple of years, you will realize that there are a lot of old-fashioned industries that have been truly disrupted by companies that didn't necessarily invent everything from scratch, but just have been a lot more customer-focused and brought processes from the real world into the digital world. And suddenly, the music industry was completely turned upside down in the past 18 years, from buying CDs to downloading them illegally on Napster, to now suddenly paying again for them, but never actually owning them. Uber, largest mobility company in the world, doesn't even own a single car, except for the flying prototypes. Netflix is, until recently, didn't even make a single movie, and now is moving into back to the content industry, but they actually started as a pure platform. And initially, movie companies thought, well, it's a great new platform where we can sell our services and stop people downloading our movies illegally. But suddenly, Netflix is not just a competitor on the platform, but is also becoming a competitor on the content, and is winning Academy Awards for that. And same for Airbnb. And what's interesting is, every single of those industries has been completely disrupted in the past couple of years. But at the same time, if you look at the banking industries, you still have the largest players are still the same largest players that have been around for the past 100+ years. Second reason is, banks, in 2008, something really incredible changed. In 2008, suddenly banks on a global scale lost the trust of customers. And not just the customer, they also lost trust in employer branding. When I was a student, the coolest job you could probably get was investment banking. Nowadays, application for investment banks dropped drastically, and the formerly highly paid traders are substituted by high-frequency algorithms. So investment banking is neither a secure job nor a very fancy one nowadays. And banks in general, even the large traditional banks that had been so far quite interesting employer and also had been quite strong in attracting new customers, are suddenly losing their customers. Because whereas in the past, your advisor at the bank has been your trusted advisor of the family, and in many cases accompanied your family across many decades in whatever village you lived in, to nowadays, many people just don't trust their bank advisor anymore. And this is for multiple reasons. On the one side, the bank advisor became less qualified because they're now, basically banks have to save costs. On the other side, people realize, well, these advisors, they don't advise me. They don't try to sell me stuff. They're paid on commission. So trust of banks really went down. And what's also interesting is regulation changed. On a European level, banking might be one of those industries that changed the most. Because what maybe some of you, maybe even most of you know, is that in Europe, with a single bank license, you can operate in every single country of the European Union. Just as a comparison, in the US, it's very different. And I'll show you later on a slide to make you understand how different this is between the US and Europe. So there were a lot of new regulations appearing in the past 15 years in banking. And these regulations laid the foundation of a lot of the innovation that happened. A lot of people look at the European Union and think they are bureaucratic, which I'm sure they are, but at the same time, banking, they've changed fundamentally. And what's very interesting is the regulations that really changed were implemented more than 10 years ago. And it took 5 years until the first challenger bank was exploiting them. And that was N26. Because N26 was the first bank in Europe that was present in 25 European markets with a single bank license. There's been no other bank that ever did that. And suddenly banks realized, wow, like what used to be our strength, that we had a bank license in every single country, suddenly is a huge liability because one bank branch has only benefits and almost no disadvantage compared to having a single bank, a separate bank license for every single country. So because of those reasons, N26 in 2013 created an idea to disrupt banking as we know it. And in fact, it was more than, it started at the very beginning with a vision, a grand vision, but much more important with a product, with a promise to bring a new approach, a completely new approach to banking and invent banking from scratch. A user experience that is much closer to the user experience that you're used to from Netflix or Spotify rather than your traditional bank. And all that at a price that is much better and much more transparent than whatever other banks are offering. And last but not least, products that are much more innovative than what you're used to at your traditional bank. So just to breeze very briefly through them, what was the game changer at the very beginning? The very beginning, on the launch 2015, we're the first bank that offered not just a paperless account offering, but an account offering within 8 minutes. And all traditional banks were, at the beginning, they laughed, and later on, until when they realized what that actually meant, they stopped laughing and started to be worried. Because if a bank process, an opening process in the branch takes 1.5 hours, and meaning it costs not just 1.5 hours of the customer, but it costs 1.5 hours of this bank advisor, and we do it in 8 minutes, fully digitally, without a single paper form, that's a real problem for banks. The other one was that we went far beyond just payments, but we also offered organized management tools for the finances to create sub-accounts, to put money into the context where it belongs so that you can easily manage your finances on a daily basis rather than a long run. And last but not least, just we, together with Apple and Google, and every single launch date, we were the first bank to offer that, together with only very few other banks. So we talked about banking, innovation in banking. Why did Europe play a stronger role in that than the United States? Well, it's interesting, but the diversity of Europe for that really helped. Because very often, if you look at the United States, you create one product, you solve it in one way, and then you roll it out on a global scale. Worked really well for the big tech companies. However, banking is different. Because banking wasn't something that it was invented from scratch, but we reinvented the way we were doing banking, but we actually solved a problem that exists for more than 100 years. And the way that people were used to solve the problems was very different in every single market. In fact, banking isn't even a national business, or it has become a national business only very recently. For most of the years, in the past 100 years, banking was a very regional topic. Every single district had, and in many cases even has, its own bank. How many banks do you estimate does Germany have? How many registered, licensed banking institutions? Few hundred? 200? 2,000? Okay. 8,000. So it's not that bad. But it's slightly north of 1,500. 7 years ago, this was 2,200. So there's a huge consolidation happening, and banking institutions, the number of banking institutions are going down. However, that means that the big brands you know, the big brands with their big towers in Frankfurt, are actually quite, I would say, niche players when it comes to the number of institutions. There are several banking groups that have several hundreds of institutions across Germany alone. And the crazy part is they are not interacting a lot. So many of those banking groups, they make it optional. You can use our app, or you don't have to. And that's why a lot of those banking groups struggle to really offer one holistic product. And if you were born and you grew up in Saarland, and then you moved to Berlin, and then suddenly you realize, despite the fact that it's the same logo of the bank, those guys can't help you. So in fact, they ask you, you should close your account with that specific banking group in Saarland and open a new one in Berlin, despite the fact that you, as a customer, might have the feeling it's the same bank. Well, all that, however, has an advantage. Because if you're able to crack 40 different European countries who are such diverse bunch, that if you scale on a global base, on a global scale, it actually really helps to understand the unique cultures of every single one of them. Because banking is so fundamentally different across every single country that when we're now entering the United States and want to then later on move on to Brazil and to Asia and to Australia, it's a huge advantage which an American company never had, because banking was just so fundamentally different, and as a European company, we're used to that. Another important part is the multiple languages. Banking is not just culturally different, but the different languages also facilitates that you do banking a different way. And when N26 launched in Germany, it didn't just launch the normal way, but it right away launched with English and German, and only a few months later scaled to 5 languages. So now we're present in 26 markets, and in every single one of them, we offer customer service and the app, so the entire customer experience, in 5 languages. And that's great, because we are the only bank in Germany that offers that. My wife doesn't speak fluent German, and she opened a bank initially with another bank, and they told her, we're in Germany, we speak German, we can't offer you English support. So that's not just humiliating, that's just also really, really old-fashioned if you think about where does global talent come from. If we think that we can win the race for innovation on a global scale with just focusing on our own people that happen to be born here, that's a problem, because that's not going to work. Silicon Valley has not become the place it has been because all the Californians are so innovative. Dublin hasn't become the hub for European tech companies because Irish people just happen to code so well. It really hasn't. What was the reason because certain tech hubs, tech capitals appeared on a global scale was that they were attractive for global talent. Europe offers incredibly high quality of living. Anyone who lived in the US will know US is a really cool place on the one hand and really sucks on the other hand. It really depends on what part of life you value. And the quality of living has become a real draw for talent. And that's one of the reasons why N26 has such a strong commitment to Europe. Not just as a brand, not just with a headquarter, but we are actually building new offices across Europe because we know that we can attract the best talent globally right here in Europe. And last but not least, the regulatory framework. I mentioned before, you need one banking license to operate in every single European market. In the US, you need a separate banking license for every single state you operate in. If you consider that the US typically is considered to be one market, and it's a big advantage for many tech companies that it has this massive home market, it's true for almost every single industry except for banking. And that's why in the US, there were hardly any new banking licenses issued for all countries in the past decades. The vast majority of fintechs in the US operate with other partner banks that have been around for ages. So in fact, the model that the N26 is running, that we have a bank license and we operate ourselves as a bank in so many different countries, just doesn't even exist in the US. Which is the great advantage, because we're not just used to being a fast-paced startup, but we are used to be a highly professionally managed bank. We are used to all the regulations, to the reporting, to the compliance topics. And now when we scale that on a global level, we feel much more comfortable to do the same in many other countries. So, however, the one thing that Europe still needs is investments. And the most important investment is not in startups, but in education. And that's why I'm very happy to be here, obviously. But indeed, the investments that Europe needs in education is far beyond what Europe is doing at the moment. What Europe is trying is offering a mass education in many universities, a mass education which is free to cheap or even free. Whereas in the US, you have these huge quality differences between the top 10 schools and all the really bad community colleges. This is definitely one of the parts in the US that is actually that sucks. But at the same time, they do understand to foster education at a really high level. And that's why investment in education will remain one of the most important aspects that determine the future of innovation in Europe. At N26, as I mentioned, we're fully committed to Europe. We truly believe that Europe doesn't just happen to be the best place that we're located in, but it is the best place to be in mobile banking. We're currently, our headquarters in Berlin. We opened a year ago, opened a technology office in Barcelona, and we just opened 3 weeks ago another tech hub in Vienna. The reasons for those 3 cities is quite simple. We want to be diverse in what we offer to our talent. At some point, I mean, in Berlin, we've probably spoken to every single senior tech lead and software engineer, and there's typically 4 options. They either don't want to join us, we don't want them to join us, they've been with us, or they are, well, actually, that's pretty much it. That's actually 3 things. So in reality, Berlin has been covered quite well, which is why currently we have 70 nationalities across our staff. So we have 70 plus nationalities represented in our team. And 40% of our team members in Berlin need a work authorization for the European Union. So we are really international. And in fact, just because we happen to be based in Germany really doesn't mean a lot in terms of where our teams come from. But the same reason is why we open offices in Barcelona and Vienna. Because Barcelona, basically Berlin is just a cool city. Let's be honest, it's probably one of the best cities to live in your 20s. Barcelona is kind of the same, just with beach and really nice temperatures. And that's not a joke. That was one of the main reasons why we opened an office there. Because just so many people from Brazil, Australia, from Silicon Valley told us, I'd love to join you, but Berlin is really cold in winter. Which is true. We couldn't argue about that. So that's why we opened an office in Barcelona. We have about 100 people there now. And Vienna is a bit different because what we realized, the further we grow, the harder it was to attract more senior talent. And senior talent is also particularly rare in Berlin because Berlin is not a particularly family-friendly city compared to other cities in the world. And that's why we chose Vienna, because Vienna happens to have the highest quality of living in the world and is a great spot to be beyond your 20s. So that's why it's interesting is we received in the past couple of weeks, we received a couple of thousand applications in Vienna, and the people we chose eventually, 80% of them happen to have family and kids. And that's really interesting. It's really different to our team in Berlin. But we are committed to Europe. However, we are already beyond our vision to create a pan-European bank. We did that. We were the first bank that operates across almost the entire European Union with one banking license. In fact, we're one of the few banks, one of the few retail banks that operate in almost all European countries in general. If you think about banking, is really a regional topic. Even the big brands, they're at most in 4 or 5 countries, at most. And the biggest brands, banking brands you know in the world, are typically investment brands, not retail products, and they are even in fewer countries in the world. So from a European company, we are now becoming a truly global company. We were the first bank, the first challenger bank from Europe to enter the US successfully. We have an office now in New York where almost 100 people, like 80 people are working. And we're scaling that quite fast. And our next step is Brazil. Why Brazil? Well, it's the largest banking market after the US, China, and India. And it happens to be a very mature market when it comes to mobile banking. In fact, it's even more mature than Europe, which has a great advantage because instead of explaining people the advantage of mobile banking, you just have to be better than competition. So that's why we're planning to launch there next year. And our objective is, if you are able to crack 2 of the 4 largest banking markets in the world, then the rest of the world is an open book for us. And that's why you see a couple of other markets that we are currently assessing for further expansion beyond 2020. And our vision, our midterm vision, is already that we, our midterm vision is already that in the next 12 months, that our entire market size reaches more than 1 billion people. The potential addressable market. If you think about the US, I mean, in Europe, we almost have 500 million already, and with the US and Brazil, that's truly the next step. And that's why the US was such an important move for us, and it's going to be very hard to replicate for many other banks, because as you know, you need a separate banking license for every single market. We currently, similar to other fintechs in the US, we work with a partner bank, which enabled us to launch in every single state at once. But we are already, and that's typically our process, we first work with a banking partner, and in the background we're already working on a banking license, which is great because we bring already the experience with us. And Brazil is going to be a true game changer. Brazil is going to be our first market that is outside of the truly Western world. At the same time, Brazil has an incredibly large number of people that have an income which would be considered to be middle class. So people have very similar needs as in Europe and the US, because their traditional banking sucks as well. But at the same time, they also have certain needs that rather in development, in emerging markets exist. So Brazil is going to be, for us, the training ground for emerging markets in Asia and the rest of Latin America. Our grand vision is hence not only to reach a large addressable market, but our vision is to become a truly global bank. And a global bank not just in terms of share of revenue or profitability or number of customers or number of employees, but our absolute ultimate main objective is to become a bank the world truly loves to use. Thank you. I left it sufficient time now to actually have a real conversation with you. So let's open up the floor for questions, and at some point let's shift over to the drinks, which I'm sure a lot of you will enjoy. Who wants to go first?
Traditional banks, as I understand it, make money by borrowing money to other people and then making money from the interest. Are you also borrowing money to other people, or how do you make money? Is it only the money you get from your customer accounts, or how do you do it?
So typically, actually, the revenues we have are also revenues traditional bank would have. However, for traditional banks, as you're 100% right, the majority of the profits come from other areas. So, in fact, retail banking, indeed, traditional banks make with borrowing money, with credit interest. With actually the largest part of the business model of traditional banks is corporate banking for big corporations or maybe small and medium businesses. So retail banking is a very small part of the profit share of the majority of traditional banks. However, we do offer credits already. So we started with payment products, with card products, with a free MasterCard, easy transaction lists, free transaction, free foreign exchange transactions. And now we slowly move into other areas as well. So we currently have an overdraft. And in Germany, is the first country, we offer also a consumer loan up to 25,000 euros. And we did start exactly that product already in France. And we're slowly venturing out. However, credit remains a very small part of our business right now. Because what's interesting is that what we really make money with at the moment is three things. Like one, the smallest part, is the side projects, products like credit. But the two biggest ones is the interchange fee. Interchange fee is basically what the merchant pays every single time you tap your card or you pay with your card. You pay with at Amazon, you pay at Rewe. That merchant pays 0.2% to us. Well, in fact, they pay it to MasterCard, and MasterCard pays us 0.2%. It's a very small amount. That used to be a very profitable business until 10 years ago, because before that 0.2% wasn't 0.2%, but was 2 to 3%. And when the EU regulated that to 0.2%, there was a huge outcry in the banking industry because everyone knew they could not make money with that little revenue. For us, this was a huge opportunity because this area was so unprofitable, banks stopped investing in innovation. They just stopped investing because they thought, we might even go just sell that part of the business because we don't make money anyways. And since all banks thought that way, there was not any need for innovation because there was no innovation in general. And for us, this was a huge opportunity. But in the second area, where we are now starting to grow rapidly, is subscription fees, so for our premium products. But in fact, the core of our business model is still the payment revenues.
Mm-hmm. Thank you.
Thank you for your talk. I've got one question. So what I always wondered, why don't the banks make much more money of all the money they store? Because when you invest in like ETFs or shares or something, they have an average annual revenue of maybe 5 to 10%. So it feels like you could make a lot of money from that. Why?
So if you find me a riskless investment class that makes 5 to 10%, I'll hire you as my investment advisor.
It's not riskless, but on average, over the last like 10 or 20 years,
yeah,
it was in that range.
So the problem is for banks. So the banks do invest if they have an investment part. However, if you look at, for example, the stock market, if you invest into the stock market, that's great because you personally can decide over your money. But if a bank does that, and it grows and it grows and it grows, everyone is happy, they pay themselves big bonuses, and once every 10 years, there's a big financial crisis where everything collapses. A bank can't afford that risk. So in reality, although the stock market tends to always go up over the past decades, there's always a time when it cracks down. And if a bank suddenly loses 40% of the money of their customers, they're bankrupt. So basically, a bank would not survive the downturns if they would do that.
Okay. And you also mentioned that there are no big fintech startups in the US. Mm-hmm. And I thought about PayPal and Visa and MasterCard.
I mean, what I said is there are no big mobile banks in the world. Okay. There are indeed a lot of very large fintechs. And for PayPal is a great example because the founder of PayPal invested into us, Peter Thiel. And what's interesting is that in the US, the fintechs are very specifically, they're specialized in certain niches. PayPal, for example, is one of the largest payment companies, largest financial companies in the world, but they've never become a full bank. Yeah. They've only specialized in fintech, on payments. And what's interesting is, in order to understand why a company like PayPal emerged in the US, you have to understand how banking in the US works in general. For example, if you transfer to someone else in this room any given amount, let's say 50 euros, okay? That's for free. Within the European Union, that's completely for free. If you do the same in the US, and I can tell you, for example, when I studied in the US, I then withdrew it and I wanted to shift it to another bank account in the US, they charge you $35 just for a regular wire transfer. Same country, same state. If it's a different bank, they're going to charge you between $25 to $35 per transaction. And that's how broken the system is. That's why in the US, until very recently, and it still is today, it was the most common way to transfer money from one account to the other is writing a check, putting it into an envelope, and sending it via mail. And you can imagine how much more convenient PayPal suddenly feels if your actual way of paying is a check. In the US, it's even that bad that my internet provider in the US offered me two options to pay, check or credit card. For credit card, they charge you a 5% convenience fee that you're able to pay online. Or alternatively, you write them a check and that's for free. And that's a truly broken system. But on the other side, for these fintechs made so much money in those niches that for whatever reason they never felt an urge or need to really become a bank.
I just wanted to ask how you do the customer service. So if someone has a problem, he can't go to you. He can't go to you. So do you have like a call center or a FAQ, or how do you handle it?
So we have several levels of customer service. For us, the best customer service is actually if you avoid the problem altogether. Sure. And I'll come back to that in a minute. The customer service itself, we have three options. We have the chat, we have a callback service, and we have email. So typically, I would say this level is it goes according to complexity. The very simple topics are solved via chat. That's the vast majority. The more complex issues, then people ask for a callback, or maybe then at some point when even we ask, can we call you? Or third, email. That's typically the more complex tasks that really take a while. And we do all that in 5 languages. And we've actually rapidly expanded customer service because what we realized about, I would say, 8 to 10 months ago, we got some real criticism on customer service. Partially rightfully, because we just grew so fast that we were not fast enough to hire enough qualified customer service agents to join our team. So we scaled up our recruitment team significantly in order to hire customer service agents. So what we did in the last 12 months, we ramped our customer service team up from 200 to now 800 people. Wow. So we quadrupled it. And we extended the availability from 6 days to 7 days and expanded also the hours from, now it's from 7 to 11 in the evening. And we're planning on a long run to go even 24/7 if we see the need arising. But this is still just a start. So so at the beginning, I would say we had a fair share of challenges with customer service. So I think at the moment we are at the level where we can be quite confident that we are able to solve the vast majority of customer problems quite fast. But as a startup, what we see is we focused a lot on how to solve the problems that arise for the masses. And in fact, that's the way how you should approach problems. But there are always these edge cases that only one customer has. Yeah. In a banking is very complex. So there are always problems that only one single customer out of our way above 3.5 million customers has. And we're now ramping up the quality to have not just the first and second level, but that we are currently building certain specialized functional teams that always focus on certain problem areas or areas where we help customers. And at that point, then we will also be able to help customers with these edge cases in a much faster way.
Okay, cool.
So you said that you are not an investment bank, but could you explain in a greater detail what the differences between investment banks and traditional banks are? I mean, like, as far as I know, are Deutsche Bank an investment bank?
Well, I typically can't really explain the model from other banks, but Deutsche Bank is famously both. So they are a retail bank and they're an investment bank. However, in their latest strategy, which they announced, I think, 3 months ago, they decided to sell off the entire investment part. And as far as I know, they fired 18,000 people in investment banking. But so at the moment, you could still probably say they're both. However, what is the difference? Well, the difference is a retail bank. So I think, in fact, there are much more differences, to be honest. But a retail bank offers banking accounts for retail customers, so every one of us. An investment bank focuses on investing money into companies. Typically, governments do not allow banks to invest the money of their customers. And there's a good reason for that, because as I said, although statistically you would win more than you would lose every given month, once in a while there's a big crash and a bank can't afford to statistically go bankrupt every 20 years. So I don't know how many, I think since you're more of an engineering school, I think a lot of you will have statistics. The probability of having a real liquidity problem if you consistently invest your customers' money would be severe. That's why investment banking and the retail banking is always very separated, completely separated. Even, for example, Deutsche Bank never invested their retail customers' money or their retail customer deposit.
So I guess this makes N26 more secure for users.
So N26 is part of the same deposit scheme, deposit security scheme, as Commerzbank, Deutsche Bank, and some of the other big banks are. So we are regulated in exactly the same way. And in the same way as in those banks, the customers' deposits are protected up to 100,000 euros. So I would not call them as more secure. I would just call ourselves exactly as secure as any other large bank in Germany.
Okay, so you don't do, for instance, you don't trade CDOs, for instance.
We do not trade at all. In fact, we do a very, we're not an investment bank. We do not have any investment business, okay. Zero. And but in fact, no bank in Europe or no bank in Germany would invest their customers' money. What they typically do is they invest it into very riskless or investments with extremely low risk, which in the past always were government bonds. Do you know how much the European Central Bank pays right now for overnight savings of banks, overnight deposits? Yeah? 0.0%. 0.0? Yeah. Negative? How negative? 1%. Huh? -5%. Well, that's. So it's minus 0.5%. So meaning a bank, if a bank wants to have an absolutely, ideally, perfectly safe deposit for a customer, they pay for it. And that's why you hear a lot of banks or banking CEOs currently warning the public, we will need to increase fees or in some cases even charge for deposits if the ECB doesn't change their policies. And that's why we reacted to that and saying with N26 you will never have negative interest rates no matter what's going to happen, because our business model doesn't depend on the treasury, on investments of on those deposits, but we make money with the payment and with the subscription fees. So our business model is really independent of the interest landscape, which is very beneficial in the current super low or even negative interest landscape.
Let's go back.
Okay.
Sorry. Okay.
Could you tell us something about the first days of N26?
Yes. So N26 was founded in 2013, and in fact, I would say the story is that the founders were unhappy with banking. The founders were really just dissatisfied with banking as we know it. But in fact, although that's true, there was one step before that, because the initial idea was we first found a bank that is very niche focused, because who would dare to just challenge the big banks in Frankfurt? And the initial bank was called Papaya. And Papaya, it's way before N26, and before N26 was called number 26, there was Papaya, and Papaya was a banking account for teenagers, a pocket money account. And it was, and may I ask, who of you has an N26 account actually? Right? Quite some growth potential. Those people who have an account with us know that one of our key features is, and in fact we were the first bank to introduce that back in 2015, was every single time you pay, you get a push notification, you paid that amount at this place, and if it's abroad, you even get the exchange rate right away. The background story for that was that initially the account was meant to be used by teenagers, and parents could transfer money to the account, and the kids could spend the money, and every single time they spend, the parents would get a push notification. But this project failed. They launched, they got investments, of 500,000 euros, in fact. And then when they launched and scaled it to the first 3,000 customers, they realized the vast majority of people who were using those accounts were the parents, not the kids. And in that very moment, people thought, well, some founders might have thought, well, we've really failed miserably. Let's shut this place down. But they did something very smart. They said, you know what? If the parents use it, then our use case might be much bigger than we ever thought. And we open our product for everyone. And that was actually the very, very early days of N26. And I think this decision was probably one of the most important one in the history of our company.
So are you planning to cut down on transaction time? Because usually it takes about a day or two to do a wire transaction.
So our plan, this is, I mean, we tend to be one of the fastest in the industry in the past couple of years in terms of booking times, because we book several times a day. Between N26 to N26, it's already in absolute real time, and you don't even need to know their IBAN. You just need to know their phone number or email, which is called MoneyBeam. And our next step is going to be introducing real instant payments. So we are planning to do this quite soon. And this, however, obviously depends also on other banks, because in order to this so-called SEPA instant payments to work, not only N26 has to have it, but other banks have to have it as well. That's why SEPA instant is actually not widely used at the moment, but I forecast that in the next couple of years, instant payments will be pretty much the standard norm for all banks globally, or at least within Europe.
Okay.
Thank you. I was wondering, how can you build a trust with customers, especially in the beginning? Because people are not choosing bank because of the only easy way. That's why I was wondering, how can you do that? So it's a great question. Over time, you attract different people. The first 10,000 customers, you can imagine, were customers that were really tech savvy. They really wanted to try out something new. And their pain with their old bank was just so large that they just felt they really need to try out something different. Over time, you get more risk-averse people. And when we hit 100,000 customers, it was the same moment when we got our bank license granted. And the bank license changed everything. Because when the bank license, the deposit protection is up to 100,000 euros per customer. So that 100,000 euros is protected no matter what. And that was one of the most important steps towards customer trust. And since then, we grow because other people think we are great. So in fact, almost 2/3 of our new customers join us because they're being recommended our product by other people who are happy with it. So that's why we keep marketing expenses quite low.
And that's why we grow organically, because basically the best salespeople we have are our customers. And that's why we invest again in our products, to make it great, to make it trustworthy, to make it secure, fast, reliable. And then again, customers tell the story further. And that's why whatever problem arises, we want to fix it as fast as possible, because we know that a happy customer is also a customer that helps us grow.
Thank
you. Yeah, maybe a bit more of an off-topic question. Is N26 watching blockchain technology in finance, and what are you thinking about it?
So generally, I mean, our company, there are a lot of people who are big fans of blockchain technology. I would say Bitcoin is quite, I would say, you really have to differentiate between blockchain, Bitcoin, and cryptocurrencies in general. But generally, the financial industry will be quite disrupted by this technology. But we build products based on the interest of our customers. And depending on how, and pretty much the interest of our customers and the demand of our customers fluctuates with the rate of Bitcoin. It's sad, but it's true. When we regularly make a market surveys, when we ask in September 2017, what product should we develop? One of the top 3 products was crypto wallet. We asked the same question in January 2017 because we were not sure anymore whether that's the product we should really develop, and then it was 1%. 1% of customers still wanted, or less than that. And so that's why we had products, or we had an idea for specific products, and we stopped the product development because we don't see the market demand at the moment. Generally, on the long run, could be very much the products that we invest in future, but I would say the biggest focus is in other areas. Because even, I mean, there are some very good crypto wallets on the market. I would say replicating one of their models is not necessarily going to add a lot of value. What's much more important is developing a product that is either complementary with that or adding value in a completely different area. Currently, we focus, where we do add already value to the crypto community, is we're one of the banks that actually accept payouts from crypto wallets. Because there are other traditional banks that are just scared of cryptocurrencies in general, and they don't permit handling them at all. And we have quite sophisticated systems where we do understand which payments and payouts from those wallets are legitimate and which aren't.
Thanks. Okay, here.
What do you plan to do with the amount of transactional and user data that you are generating? Because surely this is something interesting for your business.
Yeah. So, most important message, we do not sell any data to external parties. In fact, according to GDPR in Europe, this would be also hardly possible, in fact. Because payments data is much more regulated than other industries are. What we do use data for, and we use it very extensively, is optimizing our own products. Because we see what customers are using our products, and then we can optimize it for those use cases. What we also are using, and what we are going to invest into more in the future, how can we provide new additional products to customers for whom it's really relevant? Give you one example. A person, it's a very simple example, but if you travel to Tokyo for a vacation and you land in the airport, and in your transaction list you have a card that helps you first to understand what's the exchange rate, where do you get cash cheaply, and potentially even helps you to navigate somehow else in the payment landscape in the local market. That's adding value to the customer. Same as if you go skiing and we offer you directly, hey, do you want to, together with your one-day skiing pass, do you also want to buy an insurance for that one day that covers your skiing? That also adds value. So that's how we want to use data.
All right, thank you.
Thanks. I have a question regarding the N26 savings. I saw that you are cooperating with other banks. Why is that so?
So we, as a startup, we don't necessarily think that we need to do everything better than everyone else. We're excellent in our app. We're excellent in payment products. And we think we're probably best globally in that respect. But we don't necessarily need to be the best in savings. We don't need to be the best in insurance products, in maybe credit products, etc. Because there are a lot of very good players on the market. For example, in savings, we work together with Raisin or Weltsparen, big German fintech, that connects N26 customers to lots of other banks in Europe, where you can choose the most attractive saving rates. That's great, and that's an additional value for our customer, but not necessarily something what we wanted to build ourselves. And in fact, there are several other products like that. With credits, like consumer credits, we don't do it on our own books. We are connecting a lender with our N26 customer and bring them together. But the risk of the credit is with the other company. The process, we facilitate and make it very easy, but we basically outsourced that topic completely, and we make sure that the customers always have access to the best product on that market in respect. And if ever we have the feeling that there's a better product on the market, we can just exchange them or just add a new product on top and don't necessarily have to be the innovation leader in every single one of those products. And that helps us to be very flexible and fast.
Okay, so regarding the expansion towards America, when I lived there, I realized that paper checks are really a huge thing there, and a lot of people use it. So, are you really trying to also provide these type of checking services in America, or are you rather trying to compete with, I don't know, for example, Venmo or the Square Cash app?
Yeah. So generally, in the US, paper checks are still important. So in fact, we are considering whether we should partner with another service provider that at least somehow provides an easy way to cash in checks. It's not necessarily something we want to do inherently, to be very honest, but we do listen to customer demand. So we want to make sure that customers have an easy way to solve their financial problems. As long as paper checks are one of them, at some point we're going to offer them a solution.
Yeah, thank you, Mr. Hauer, for the presentation. My name is Erdinch, and I'm working for the Media Tech Hub Accelerator. And together with the Hasso-Plattner-Institut, we try to support startups with a 6-month program. And whoever is interested in building a company or who is already building a company, please talk to us after the presentation. And my question is to you. In our program, we try to encourage the startups to build something people want. And product market fit is a big issue. What is your advice or wisdom on product market fit, bringing value to the customer?
This is a great question, because indeed the vast majority of customers fail, the vast majority of startups fail not because they're lacking money, but because they're building a product that is not solving a key issue for a customer. So I think my biggest advice is make sure that whatever problem you're solving really is a super, super painful problem for customers. Start with the problem. Don't start with a product idea. Because if you start with a product idea, most certainly you're going to build a product that isn't necessarily solving one of the key issues for the customers. And another important topic is, how do you check the product market fit? I think an important part of that is do not try to develop a product inside closed halls, but go outside and speak with your real customers. If you work on a product and make the market service inside this building or maybe on the campus, you're going to get a very skewed result. Because the students, especially HPI students, are not necessarily the vast majority of the mass market. So if you really want to understand how customers think, go into the city center, and potentially you need to also understand how other cities in Germany think. Because the biggest problem that founders are very often doing is that they're too scared to speak to people. They speak to people they know. They talk to their friends and families and ask a close friend, would you buy that product? Well, of course they will not tell you, oh, come on, that product is bad. Your idea is bad. They will tell you, oh, it's a great idea. They will encourage you to do that. And maybe in the background they might think, well, that's a pretty stupid idea. But go to people that don't know you. Go to people that have absolutely no affiliation with you or your product. And not only ask them whether they would pay for that, ask them whether they want to buy it right now. Because only that question will give you a real answer. And that's why, by the way, why Kickstarter and some of the other online platforms are so popular, because that gives you a first validation whether or not people, real customers, are willing to pay real money for your product.
Thank you.
Hi, Leontine. So thanks a lot for the great insights that you gave into like the daily business, but also the strategic decisions that you made. I really much appreciate that. And it seems to be, although I'm not a customer, it seems to be a really great product that that you created, and seems to be like hitting a very sweet spot between like the traditional banking and like this, let's say, new era of fintech. However, we also heard that there were like a few problems which seem to be solved right now, if I understood you correctly. My question is a bit going to the direction, how much traditional knowledge from the traditional industry do you need to run a business that is kind of disrupting an industry, and like maybe like transferring that to numbers, what is the ratio between the traditional professions working in the banking sector and those that are more IT related or completely separate from that?
Yeah. So it's also a good question. So I think what really defines us is that we are a mixture of two cultures. On the one side, we are highly paced startup, and on the other side, we are a highly professionally managed bank. And this isn't a culture that we created after we got our banking license, but this is a culture that we nourished from day one. Currently, we have more than 1,500 employees, most of them based here in Berlin, and the vast majority hired in the last 12 months. And when we started, so if you think back 5 years ago, we had less than 20 employees. Of those 20 employees, 2 of them were former executive board members or CEOs of big banks. So we didn't just hire a bunch of really young interns straight out of university and then created a bank, but we got highly talented people, very experienced people from the banking industry into N26 to help us disrupt the market. So that's why we could disrupt the market from inside, from within, rather than being just an external player that doesn't know how to do banking. We know how to do banking, but we do hire a lot of people from tech companies. So that's why, although we got a lot of professional knowledge from compliance and reporting topics, which are all really crucial in banking, into N26, but at the same time, we let ourselves inspire by the big consumer-friendly B2C tech companies in the world. So we let ourselves inspire by Spotify, by Netflix, by Uber, by Google. We never, ever look to Frankfurt when it comes to inspiration for new products. Never. But at the same time, as a bank, you need a lot of talented and experienced bank people, but very often our teams are quite, I would say, diverse. For example, we just recently hired a chief banking officer. He was in the executive board of a large German bank for decades, and then became the banking lead for Google and worked there for 5 years. Well, that's a mixture that we like. basically he was implementing Google Pay and a lot of other Google products in Europe. So he has both experiences, and that's what we like. We combine these two worlds that other banks struggle to combine, and that's one of the biggest USPs we have in our team.
Do you plan on going public?
We are considering that. There's no urgency in that, but we could very much imagine doing that in the next 3 to 5 years.
You touched on Frankfurt for a short moment. Why is Berlin a good place to be for number 26, also compared to international venues? I mean, number 26 now expanding to the US. I think there is some, I don't know, yeah, I think Berlin is probably chosen. Yeah.
So, in fact, the founders at the very beginning even were considering whether or not they should found it in Berlin or in London. Because back then, those were the two fintech cities in Europe. Nowadays, with Brexit, the decision would have been much clearer. But back then, London was actually a clear competitor. The reason why people still chose Berlin, because Berlin has, first and foremost, a truly international vibe. It has an incredible number of tech talent already based here, from all over the world. It's a very inspiring city, and last but not least, it's a city where, especially back then, venture capital was more abundant than in any other city in Europe, other than London. And in fact, some of the first investors came from the DACH region. So I would say the first rounds of investments were done by a combination of German, Austrian, and Swiss investors. And one of the main investors was based in Berlin back then, and they helped actually set up our first, I would say, the first company in Berlin.
Okay, thank you.
I would propose one more question, and then we move over quickly to drinks. Does it work? Who wants the last question? You can give it to her. I think we had very few questions from that area.
Okay, it's a more marketing question. Do you have plans to attract elderly people as potential customers? Because I can imagine that they have extra issues putting their money in a non-physical place. Or do you already have people managing their retirement in your app?
So we don't, when we segment our target audience, we actually don't, we look at many factors, but age isn't one of them. What we do look at is behavior rather than age. We are addressing smartphone and innovation and tech-savvy people, no matter whether they're 20 or 60. In fact, the average N26 customer is 33 years old. And almost 50% of our customers are older than 35. So although, to be fair, beyond it goes down quite a bit beyond 50, we do have quite a few customers that are beyond that. So we don't care whether somebody is 60, but if that person anyway uses his or her iPad sitting on the couch to book flights or watch Netflix, that person is very as much of a customer as a 21-year-old Instagram model. So we don't really care about age. What really matters to us is behavior. And we do focus very much on behavior. We do not address at the moment people that can't handle a smartphone.
All right. Thanks. It's very interesting.
All right. Thank you.